Guys, it's Doc's Market Minute for Tuesday, December 8th. Just want to show you a really quick setup, which is one of my favorites. So the way that this whole setup started was we started gapping down this morning, and this is the spiders. You can see that we have a very defined trend line here, which is a rising trend line. So what I knew was if the price came down to that trend line, then I wanted to look for some type of trigger to take a bounce off of that trend line long, even if it was just for a very short-term trade. I'm going to switch over here to the E-mini futures contract really quick here because this is something I just monitor all day long, even if I'm trading a longer term strategy. And what I saw was a really deep test here at about 10:30, and what made that unique was the divergence that I saw on the tick chart. So this tick chart is purely looking at the NYSE and the number of stocks that are ticking up or ticking down. And what happened was we made a lower low in price here at about 10:30 while we're making a higher low in the number of ticks. And so you can see that it just took off right after that. So that was kind of my signal to say, okay, we've had divergence on here. We have positive, essentially this is a buy program kicking in at this point. That was right around the place where the triangle pattern was touched as well too. So this was a good entry for a long. I don't do this very often, but today I just entered a very short-term call option and it was good for a 40% return. So the big advantage with using something like a call option for a short-term trade like this is that it's limited risk. So you're buying that option for a limited capital, right? And so that defines your risk from day one, unlike a futures contract where it can go up or down. You have unlimited risk and unlimited returns in either direction. So this is a case where I didn't want to manage it and monitor it all day and stick in bracket orders. I just wanted to set up a price target, set it with a limit order there, and about an hour later it was out. So it's a good example of how you can build a stronger case for a trade by using all of this confluence. So you're looking for a basic theory for the trade, which in this case was that triangle pattern that was on the S&P, looking for a test of that triangle pattern, and then looking for additional corroborating evidence that shows that we have a change in polarity as well as a change in sentiment coming in. So that's it for today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.